The Fed's sending mixed signals again. Jerome Powell wants to wait and see, but Waller says cut rates now. And despite geopolitical flare-ups and weak labor signals, mortgage bonds are holding strong. That tells us that opportunity is brewing for the prepared. Welcome to this week's Win Wednesday. That's What's Important Now Market Update, where we help you stay ahead of the curve and win no matter what happens in the market. So bonds cleanly broke above the 200-day moving average. The Fed made a controversial decision and held rates steady. Powell says, hey, we got to wait and see what happens. But a couple of Fed governors, Bowman and Waller, they want cuts right now. And that's building more and more or getting on board with that. Jobless claims hit a 10-month high. That's another signal that labor market is cooling. Existing home sales crept higher, and they exposed some massive pent-up demand. Now, last week, we suggested floating through the Fed announcement, and that call was confirmed. Mortgage bonds broke above their 200-day moving average, and that held support all week. Remember, bonds going up is good. This week, continue floating to start with a watchful eye on some technical signals and the consumption expenditure PCE report coming out on Friday. Now, 62% of builders are offering rate buydowns. 37% have cut prices. That confirms our call to press for incentives and seller concessions. The data shows about a 0.5% to 1% drop in rates could unlock a massive buyer surge. So be ready before that door opens. Now's a great time to run your numbers again. Whether you're house hunting or refinancing soon, a small shift in rates could mean real savings. A quick update to your pre-approval or scenario plan, it just keeps you ready to, strike and feel confident in that when the right home comes along. The Fed's stuck in a philosophical tug of war. Powell says to tread carefully. Other Fed governors are saying, no, we got to do something now. And all this with jobless claims hitting a 10-month high, we've got even more evidence the Fed may need to act sooner rather than later. So because our flow strategy and push for buydowns last week were confirmed with this week's data, here's our main takeaway in all this. When the Fed's divided, the prepared win. So get underwritten before you go under contract. Explore some seller-paid cost strategies and prepare for your move before rates move. That's how you turn the volatility here into opportunity, into victory. All right? So if rates dropped 1% in the next 30 days, would you move or you still wait? What would tip the scale for you? I'm curious. Let me know in the comments. Wherever you're at in the process, let's connect. Ensure you're offer ready. Stay tuned, stay ready, and as always, be the Buffalo. Thanks for watching. We'll see you next week.